Hello, investor and trader. Welcome back to another video. So I got a comment asking me to make a video about my Fidelity trading platform setup. So I'm like, yeah, sure, why not? On top of that, I'm gonna show you guys my trading station too. So let's just get started. So if I zoom out, right, take a picture of my trading station, and it looks like that. Okay, so this right here is a TV. It's not even a monitor. It's a passed down TV from my little sister. She wants to throw this TV away. This TV is like, I don't know, 7 years old, 6 years old ish. It's pretty old. I'm like, hey man, I could use that for my trading. So she gave it to me. So it's a passed down used TV. This right here is my laptop that I bought, I don't know, 2015, 2014, 14. Damn, this laptop almost 7 years old. So this laptop here, when I bought it was in college. Now, if it wasn't for my engineering programming classes like C++, Java, MATLAB, or SolidWorks, I would not buy a laptop because I don't need it. When I go to engineering school, I didn't even need any of that stuff until I have a programming class. I'm like, damn it, I need a laptop. But next thing you know, I use that for trading. So, hey, it's a win-win situation. So this laptop here is not even a high-end laptop. It's pretty low end. I mean, it only have 8 gig, does it, of RAM. So here you can see I have the Dow right here up and the QQQ up. The reason why I have these up all the time, again, is the QQQ and the Dow, because 90% of the time I trade stocks in the QQQ or in the NASDAQ, like Facebook, Amazon, Google, Teladoc, Netflix, blah, 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 right? I want to see the direction of the market because if the QQQ is going down, most likely Facebook will go down with it, right? That's why I have it up. Same thing for the Dow. Sometimes I trade stock in the Dow, like 10% of the time, like McDonald's, JP Morgan, what else? Coca-Cola, Home Depot. Now, you may ask, who the hell trade Coca-Cola? I do. I trade Coca-Cola several times. You may ask, how do you make money off of Coca-Cola? Well, you make money off of Coca-Cola when you buy in bulk, right? You need to buy like 5,000 shares or 10,000 shares or 20,000 shares. All you need is 10 cents move, 15 cents move, 30 cents move. You're done for the day, right? That's why I trade Coca-Cola, because I could buy in bulk. Okay, so here I have other charts that I look at. Other 8 different stocks. I always rotate these. Like, okay, I watch JD. Next thing you know, I look at Netflix. Next thing I look at Amazon. Blah blah blah. Always change because I want to see what other stocks are doing. So, and this right here is a piano chair. It's not even it's not even a table. It's a piano chair I use for my stands. For those who don't know me, I'm a very minimalist, meaning I have nothing in my room beside this TV, this laptop, this piano chair, and my bed. I'm pretty minimalist because when I go places, you can see here. Let me show you one of the thing right here. Look at that. I have a tray on the ground, on the floor, right? Because I was traveling that day. So I make this post, right? You can see my setup. See laptop and my sister old TV. Oh, this is a different TV. This is not my TV. It's my sister TV at that time. But you can see my trading station. It's very simple. On the floor, on the ground. All I carry is entry and exit, right? I trade DocuSign that day. Falling knife, boom. See they start slipping in, and near the pre-market low, what I'm gonna do? I'm gonna buy, right? Where am I gonna sell? Into resistance. Repeat the process. Repeat the pattern. The profit just comes in. So yep. So let's just go to the TV. It looks like that. So what you guys do not see is this right here and this chart right here. These right here are a bigger time frame because I want my viewers to see, what's going on in that instant moment. I don't want them to see this. This is kind of boring for them, right? It's very important, but in the end, it's not a big picture, the scheme of things. Because as a day trader, all you care is price action during that day. Well, that is for me is half true. I also watch other time frame too, just for a double confirmation. So this is a 5 days, 30 minute, 5 days, 60 minute. Moving averages, just 6, 20, 6 and 20, or 18, up to you guys. You see the daily, I changed to 18. 18 and 20 is pretty close. It doesn't really matter. Just get, moving averages, it's just guideline. It's not, it's lagging indicators, you know? So this is the main chart. Notice I don't have the Bollinger Band up. I don't have the VWAP up for like most day traders do for the VWAP. For me, VWAP is not very important. In fact, I don't even use it. Okay, volume. Same thing. Volume. I don't really use volume either. It's just because I trade blue chips. You know what I mean? Amazon, right? I mean, think about it. Amazon a day on average around 2 million shares, 3 million shares, right? So even someone buy, no one gonna buy here, 50 million shares. You know what I mean? You get the idea, right? Volume is very low during the day for Amazon, even Facebook and so on. So because these are big ass blue chip that hardly moves, unless like institutional step in by like I don't know 100,000 shares. Sure, it'll move, but there I can tell you this. I'm sure 99.99% of retail investors do not have 100,000 share of Amazon because you wouldn't be watching my video, right? You'd be a multi-deca millionaire plus. You get the idea. RSI. So I use RSI. It helped me find out, hey, is this the bottom or near the bottom? Of course, I also use the pre-market. You can see right here, right? The gray or the pre-market time or after-market time. Moving averages. I use 6 and 18. You can play around with these numbers if you like. Other than that, that's it. That's all I need because I read candlesticks when I trade. So when I see the falling knife fall, fall, and fall, right? That's my bread and butter is catching a falling knife. I'm looking for that reversal signal. Now you may ask, what is the reversal signal looks like? Well, Google it. All you look for a pin bar, a bullish engulfing candle, the first green candle, blah 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 blah, right? And prefer 5 minute. I prefer 5 minute, 15, 30, 60. I do not really trade 1 minute. Sometimes I just look at it, but I don't really trade. That's why I do not like to make live day trading video because sometimes I would sit here and wait for this to finish falling. Can you realize how long that is? That's like 30 minutes for me just sitting there and watching the damn thing falls. You think people are gonna watch that and have patience enough to wait for 30 minutes? People they haven't had patience enough for drive through, man. With 10 minutes already like you get the idea, right? They're already mad. Like, man, hurry up, right? So that's why I trade 5 minutes, and that's why I like to do great day trading recap because I'm very patient. I want the stock go to the price I want to, think it will go, or at least at that time the reversal signal it could fall almost like to 2 hours. Who knows? And then of course I have the daily. The daily is just a bigger time frame. Sometimes when you see that massive gap down or miss earnings, it's nice to see the daily to give you an idea how low the stock can go. So the daily, I have four, I call these the core moving averages. The 50, the 100, 150, and 200. All these are EMA, not SMA. SMA, EMA, for me, is almost the same thing. I prefer EMA, it's just more faster paced moving. That's why it's called exponential. These right here, for me, I call them core. Core, CORE, the core moving average. These right here are the momentum moving averages, the 6 and 18. Again, you can play with these, so you can put 4 moving averages, 5, 6, 18, 20, 21. It's up to you. I prefer 6 and 18. That's just me, my preference. So that's all I need is these 6 moving averages. 4 core moving averages, 2 momentum moving averages. RSI. I use this for the daily too. I just want to see when it's oversold, especially the stock keep falling. For example, like Home Depot. Home Depot just falls and fall right here. And I know most guys are not going to trade Home Depot, right? Because it's too boring for most of you guys. But notice here, RSI for Home Depot is very low. See here, RSI is low. Stochastic is low. Guess what happened? Bounce. Same right here. Stochastic is low. RSI is low. Dude, this is a perfect swing trade. Buy around 250, 240, 1,000 shares, 2,000 shares, 3,000 shares. And boom, look at that. Man. All the way up to 170, dude. Man, you can't imagine 3,000 shares? Like 4 to 5K easily. But you get the idea, right? So that's why I have these up. These are just standard settings. Of course, the weekly is also important, especially when you catch the falling knife on earnings, because some of these earnings stocks just tank, man. Like, what the hell? How low can it go, right? That's why you gotta zoom out to see how low can it go. Can you imagine like 170 all the way down to 80, right? So see a bigger picture because these are just falling. Now, if you're good at catching a falling knife, you probably do not have to go this far, zoom out. But for me, I'm not that good, so I prefer to trade like a chicken. I look at all kind of time frame. Monthly. Same thing for the monthly. For I give you a good example, like Clorox. Man, I was stuck in this stock for a long time. It went from like 200-ish all the way down to 200. I'm asking myself, dude, how low can this thing go, man? Cause it keeps falling and falling. Look at that, right? Every day for almost like 2 weeks plus. It busts through all the daily moving averages. So what do you have to do? You have to zoom out. You see? There you go. So now we know 175 could hit, right? This is the key level over here. Even right here, when a company buys share buyback, where do you think they're gonna buy it? Do you think they're gonna buy it right here? Hell no. They're gonna buy it somewhere around when the stock hit the 200 moving averages or below. That's the institutional buy the share buyback. There's no penny stock buyback, okay? There's only penny stock dilution, but no, you get the idea, right? Okay, this right here. Let me go Amazon. So this right here is the order screen. I always have this up because I want to see, especially if you use market order, when you trade blue chips, like big quantity, like 1,000 shares, 2,000 shares, 5,000 shares, you need to go down to the cents because 5,000 shares of wherever stock ABC at $200, like Facebook for instance. And I watch to the cents. I want to make sure is a because if you want the whole dollar, dude, 5,000 shares, 10 cents. That's you get the idea, right? It's a lot of money. So that's why I have this order screen up. Next is level 2. For blue chips, you don't really need level 2s. For my honest opinion, penny stocks, you definitely need level 2. Time and order of sales. This is very important too for even blue chips during pre-market, especially during pre-market and aftermarket. If you realize, if you notice sometime, like Amazon or other blue chips that, hey, why did this stock pop like $2-3 on pre-market? But then you look at it, what the hell? Only 14 shares? You see what I mean? It doesn't validate the $4 pop. Next, 5-10 minutes, the stock go back down because it's too low. But now, if someone buy like 14,000 share Amazon, oh yeah, the stock gonna go stay up there for a while, right? Because that's a big volume. Next is the P&L. This is closed position P&L. Okay. The reason I like to see closed rather than open because I don't want the money or the profit, the loss, whatever, fluctuate during that trade because when I first began trading, dude, that played with my emotions so much, especially when I'm down like several $100 back then. I kind of like scared. Then when I see like a couple $100 profit, I get all excited. I want to take my profit, you know what I mean? So that's why I prefer not to have that up anymore. I just want to see my net gain or net loss at the end of the trade. That's why I prefer a closed P&L. Again, that's just my preference. The clock right here. So the clock right there, I downloaded from this website, Desktop Digital Clock. Because I noticed this platform doesn't have a clock. This clock right here is too damn small. So prefer a clock with up to the second. Why the second is important? Because for me, I like, especially catching a falling knife, especially I'm a 5-minute stock trader, and I want to see the whole 5-minute finish, or at least what kind of candle it formed. Is it a doji? Is it a bullish pin bar? Is it going to be green? Is it going to be red, right? The last minute of the 5-minute candle bar is the most price action. You don't believe me? You can watch for yourself, most of these stocks. So it's so important to watch down to the second. Other than that, that's all I have. I mean, try to keep the stock chart as minimalist as possible because you don't have a lot of moving averages and support resistance everywhere. You can if you like. I mean, for me, you don't really need all that stuff because at the end of the day, what matters is are you a consistent profitable trader based on your trading setup or not? If you are, stick to it. Maybe you don't need any other stuff. Just eliminate a little bit. It makes the chart look more clean, right? So yeah, that's pretty much it. All right, see you guys in the next video. Bye.